Now, Branch is a loan company which has created an algorithmic approach to determine creditworthiness via customers' smartphones. Branch operates in Kenya, Tanzania and Nigeria when we talk about Africa, but they are expanding. And to tell us further here is Daniel Slapak. Thank you so much for joining us.
Thanks for having me on the show.
All right, let's just begin by breaking this down. What exactly is Branch? How does it work?
Yeah, so there's a lot of jargon out there, but to simplify things, Branch is an app that you can download from the Google Play Store for free and apply for a loan in seconds.
Okay, so this money comes from Branch itself?
So Branch has raised a lot of cash, should I say,
Sure.
to enable us to lend to Kenyans, Tanzanians, Nigerians, Mexicans, and we soon hope to launch in India.
Okay, so it's very wide, and you're going across the globe essentially to a lot of places. And what exactly, you founded in 2015, I believe, and
That's right.
it has been downloaded, I believe, so far onto more than 1 million mobile phones in sub-Saharan Africa, as you've been quoted to say. So what customer information do you use to vet those people who want to take loans, and how do you access their information?
Yeah, that's a really good question. We've done tens of millions of loans already, and we use information on the phone to essentially determine whether someone's creditworthy or not, and we do that in seconds. And the advent of the smartphone and Android across the globe has allowed us to do that. We'll look at all kinds of information. We look at probably 3,000 data points to piece together the picture of the individual and whether or not they're creditworthy or not. So we can look at things such as what time of day they apply for a loan, what type of phone they have, how many calls they're making a day, what their SMS volume will look like. All these factors together give us a good sense of whether the individual is likely to repay a loan or not. We've been able to build up a huge amount of data, so we're able to do tens of thousands of loans every day, and we expect this year to disperse around $250 million.
Wow. Okay, so that's a huge amount. And when you talk about these tens of millions that you've already reached out to, there's still massive competition from the local Kenyan market, because research from the government shows that around 7 million Kenyans get their credit advances from local shops and kiosks, chamas, relatives, friends, the informal side essentially. So what is giving you that competitive edge?
Yeah, that's a super important question. This space is very competitive in Kenya, and in every market, of course, has its differences. But in the Kenyan market, I think what differentiates us is as we get to know you, the loan sizes go up and the interest rates go down. And so there's a concept of dynamic pricing where we can offer a different rate depending on your riskiness. So I think one of the most important differences is, as you compare us against the market, is interest rates on our larger loans come down dramatically. And that's in effort to really boost the economy, stimulate the economy, and get micro enterprises, which are the bulk of our customer base, to have the capital that they need to expand their business.
So like when you talk about SMEs who need these sorts of loans, of course, to expand, like you say, and what are some of the parameters that you've set for the interest rates?
Yeah, so the interest rates vary. So we look at interest rates on our larger loans as low as 20%. And what's very important for us is to make sure that lending is affordable for micro businesses. So our markets are micro enterprises, the traditional mama and boga and the like, who don't have time to go to a bank, don't have time to fill out lots of forms, don't have time to try and explain their cash flow. They want to go to their phone. They need capital now, and Branch is the answer because we're able to do things so very quickly and in a very transparent way. So that's why we've been able to become one of the highest trending apps in Africa in finance, and that explains our success.
Okay, and you know, as we talk about Africa as a region, smartphone adoption across the continent is rapid. It's still growing, and reports from this year show that adults who report owning a smartphone in South Africa account for 51% compared to 40% who have basic phones. Kenya, 30% smartphones, 50% basic, and it goes on. So what do you see for the future then in terms of growth of this adoption and how it impacts businesses like yours?
Yeah, a really great question. I think if you kind of fast forward 10 years from now, and our investors are kind of looking at branch like that, you know, where will the world be in 10 years? We're seeing a world where everyone will have a smartphone. Smartphone prices will come down. The cost of data will come down. The length of battery life will increase. So you can imagine a world where pretty much everyone will have a smartphone. And in that world, you're going to have essentially the mobile device as the primary place of business for one's financial services. You're going to go to the phone for your loans, but you're going to go to your phone for other things. Your larger loans, just not your small loans, insurance, savings, money transfer. So you can imagine the world where all of that is happening on the phone, and that's the world we're very excited about.
Okay, and very quickly, as we just wrap up, quickly, my question would be that, of course, you have these, you know, you're in Nigeria, in Kenya, in Tanzania, but also you say you're in Mexico, in the USA. So what is the greatest difference that you've noted between the African markets and those of North America?
Yeah, so great. So yeah, just to clarify, we're in Mexico. We expect to launch in India this year, and we'll announce other markets shortly. So every market has its differences. I think, you know, when you look at a market like Nigeria, you've got a huge population in Lagos alone. Mexico is a massive market. So we're really looking at very large markets. Each market has its own differences. Kenya, it's very easy to disperse money. Everyone's on M-Pesa. Tanzania is a different story. You have different mobile money wallets. Mexico and Nigeria, you don't have mobile money to the same degree. So each market has its own challenge. And that's why, as you look towards who's going to excel in this sector, who's going to be able to build a global brand, who's going to be able to raise hundreds of millions of dollars, I think there are a few companies who can do that, and we hope to be one of them.
Okay, thank you so much for joining me today, Daniel. It was very insightful to have you with us.
Thanks for having me on the show.
All right, well, that was Daniel Slapak from Branch talking about lending in the country as well as in the region as well, and what Branch does across the globe and aims to continue doing. Stay with us on Business Today. We're going to take a short break now, but we'll be right back.